This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi, how are you? It's Mathis Connor with Connor Management Group, and this week we're going to look at the best small cap stock to buy right now. Today is Tuesday, October 28th, 2014. And here on the opening slide, we see that this company is in the business services industry, and we see its 6-month upside potential at 19.0%. Going on to the second slide, we see that the name of this company is called Convergys Corporation. The ticker symbol is CVG, and once again, they are in the business services industry, and we see the 6-month upside potential at 19.0%. On to the quick facts slide. Here's a business summary description of Convergys. Convergys Corporation provides customer care and billing solutions to a large roster of corporate clients. The Customer Management Group offers live agent support services through 70 call centers, as well as automated self-service solutions. The company provides business process outsourcing solutions for communications, financial services, technology, and other vertical markets worldwide. The company offers various customer lifestyle solutions comprising customer service, customer retention, technical support, business-to-consumer sales, complex device support, business-to-business sales, and account management, back office collections, quality assurance, and direct response services. So from that description, you can see that Convergys is kind of a outsourced customer care, customer solutions business service company. The website is www.convergys.com. That's CONVERGYS.com. The company is headquartered in Cincinnati, Ohio. They were founded in 1998. They have 125,000 employees. Once again, the ticker symbol is CVG. The sector they operate within is services, and their industry is business services. The annual revenue of the last 12 months with Convergys was $2.4 billion. Their net income was $45 million, and the cash from operations was $230 million. The market capitalization for Convergys now stands at $1.9 billion. And just so you know, the cutoff for a small cap stock are stocks whose market capitalization is at $2 billion or lower. Convergys is at $1.9 billion right now. On to the products and services slide. I have to admit, this is a small cap company, but this is a company that's had very few graphics or pictures of their products. Very few. We have a picture of their logo, Convergys, and we have an excerpt from one of their presentations just highlighting the services of which we just described: customer service, technical support, back office, outbound services, sales, collections, relationship management, analytics, as well as a few more. So this is a pretty thin products and services slide compared to what we usually provide. Onto the metrics slide. Once again, the annual revenue for Convergys over the last 12 months was $2.4 billion. The net income was $45 million, and the cash from operations was $230 million. So, if anything looks a little funny, the net income seems a bit low, that's for sure, $45 million against $2.4 billion. But they do have cash from operations of the order of $230 million. The operating margins for 2013 were 12.0%, and for 2014 they're tracking to be 12.5%, essentially the same, reasonably flat. On to the valuation metrics. The trailing PE ratio for Convergys now stands at 15.7, and the forward PE ratio now stands at 11.7, which is the trend you like to see when you're taking a long position. Analysts on average expect the earnings to increase quite a bit. That's to move from 15.7 to 11.7. That's a trend you like to see. The PEG ratio is not too high at all. It's at 1.3. The price to sales ratio also not high at 0.8. And the price to book ratio also not high at 1.4. Those are nice low valuation type metrics to give you comfort that the stock has some upside. And the enterprise value to EBITDA ratio stands at 7.4. The recent closing price for Convergys, which was as of yesterday's close on Monday, was $18.99. The 52-week low for the stock was $17.36, and the 52-week high for the stock was $24.43. So right now, Convergys is trading closer to its 52-week low than its 52-week high. The 20-day moving average stands at $18.09, the 50-day at $18.47, and the 200-day at $20.35. That's typically not the trend you want to see. That implies that there's been a pullback, with the lowest price being the most recent moving average, the shortest and most recent moving average. The average daily trading volume for Convergys is 592,000 shares per day. Not heavily traded, but respectably traded. The beta for the stock is at 0.8, so this stock is a little less volatile than the market in general. When the market goes up, the Convergys on average doesn't go up as much. But similarly, when the market goes down, on average, Convergys doesn't go down as much. So the beta right now stands at 0.8. The dividend yield for the stock, respectable, not great. It's at 1.5%. And the average dividend payout ratio stands at 16.3%. On to the price chart for Convergys. As it's mentioned, Convergys has ranged over the last year from between about $18 to a little over $22. And starting out a year ago, the stock started out at around $20, and it peaked around, April or May of 2014 at a little over $22. And then from the end of June to July, the stock has pulled back a bit. So it's pulled back from that $21 range down to around the $19 range. Now, we went through the recent headlines and we couldn't really find any specific news to explain the pullback. So we're at a loss. It might just kind of be an industry trend, or there have been some upsetting news in the industry, which happens to some stocks, and they all pull back as a group. But we couldn't find any material information, that's for sure. So Convergys right now is trading just around $18.99. Now, going on to the summary slide. So the financial statement quality of Convergys is actually very good. The amount of debt that they have due over 5 years is $365 million. And we see that as being quite manageable, while the net profit has only been in the area of around $100 million or so over the past 5 years. That's a debt that they can retire quite comfortably. And evidently, based on my earlier statement, there's a typo in the amount of their net income. The net income for 2013 was $117 million, and the net income for 2014 was $155 million. So they can retire their debt without much of a problem. So the operating margin trend, as mentioned, has been flat. The price pattern trend we consider to be flat. It's advanced, but it's pulled back a bit. And the overall market conditions right now we consider to be neutral. The market has been a bit more volatile as of late over the last, say, 2 to 3 weeks. But on a net basis, it's not moving too much in one direction or the other, in our opinion. So our 6 month, so the recent closing price was $18.99, and our 6-month price target for Convergys is $22.60. So the company has an upside potential of 19.0%. So Convergys has some positive trends. They've been growing during 2014 through as a result of an acquisition, and they've also been improving their new bookings and new orders. Their financials are quite strong, and we see that as an undervalued opportunity right now. And so for this reason, we believe that Convergys is the best small cap stock to buy right now. We hope you found this presentation helpful, and we'll talk to you soon. Take care. Bye. Hi, this is Matt Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where we, where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years, actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental and technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to CONNORMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trade's, a minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more.
And on to the summary slide. Financial statement quality
so
for
a lot of
Harris
changes
is quite good.
You'll be hearing more and more about this account service.
The debt that they have due over the next 5 years stands at about $1 billion.
Let's see.
And their net profit each year
is
about
$300
million.
Our social media footprint.
You can see
basically
that
we have a presence on all the major websites for your convenience.
The next 5 years.
And there you
the
can get a lot more articles,
as we mentioned, has been
and hear about different points of view.
The price pattern trend has been increasing.
On things going on in the market. So we have a presence on Twitter.
And our
Google
overall
Plus,
market outlook
Facebook,
is neutral,
as well as LinkedIn
back
also.
a little bit over the
so
past
you can
1
be
to
kept
2
abreast of
weeks.
our thinking on stock
We don't think
investing,
there'll be much
as
more
well as
pullback.
things we share
some
by
overvalued
others
names
who we
have been
consider
selling
thought
off.
leaders.
So we don't
And
expect
finally,
Harris to experience
CMG offers 2 newsletters,
or the other,
both weekly, 2 weekly newsletters. One is to
the
keep
recent closing
investors up
price
to date
for
about
ours
relevant news,
was
$25 in-depth analyses on quality investment opportunity.
Price target
and
is
that's
$30,
and those opportunities are consistent,
and therefore
with,
we see
the
6 month
free
upside
weekly
potential
podcasts
at 20%
and videos. And the other
some of the
newsletter
other
we provide is our
things
premium
about
newsletter,
ours is
and that one provides the latest top picks from
increasing their presence
algorithms that
in
we
Europe
run
and Latin America,
every week.
And they've
So,
also had a notable
feel
increase
free to
in
go
the
to
backlog for
CMG
their products.
So it's for all these reasons that we believe ours
you can go
is
there
the best
to subscribe
technology
to the newsletters.
And
If you
we hope you've
go
enjoyed the
to
presentation.
the website, you can also view this deck.
And we'll talk to you again
and,
next week.
or
Take
any
care.
of the decks
Bye.
going forward. And there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.